Hi guys, today we're talking about stocks, crypto versus real estate. What makes the most sense? And I know people are very passionate about whatever they do. If they invest in the crypto market, oh my God, there is no better investment. Or if you are a stock investor versus people who are absolutely passionate about real estate. Yet today, I'm going to present my take on it and what do we really think? And this is something that you may want to just think about. So let's first start with what is the basic understanding? What is investing versus gambling? And this is where I think the problem really starts. A lot of times, most people mislabel what they're doing. At the end of the day, it's your money and it's your future that you have to think about. But a lot of times we have to first understand what is investing. What do we mean by that? What is the definition in terms of the dictionary definition versus in actual life versus what is gambling? So here's my definition. Investing means being able to analyze the risk in any sort of investing versus the return and or the reward with a certain amount of predictability. Meaning, if you just say to me, well, Andrew, I love to gamble. Every time I go into the casino, I seem to win. Well, here's my question for you. How do you think they build casinos that are worth billions and billions of dollars? Because thousands of people that walk in, they do not win because they would not be able to build casinos that make a lot of money, and that's an obscenely profitable business, not for the gambler, but for the investor in that case, meaning the owners of the casinos. So that would not be an investment when you walk into a gambling joint. It's called a gambling joint for a reason. So gambling, on the other hand, is something where you associate fun with it. You associate, oh my God, maybe I will win big, or maybe I will lose. So whenever we look at crypto investing versus when we call it stock investing versus real estate investing, the first thing I want you to think about is, am I gambling with my money? Am I just having fun because I'm looking for a huge reward and a huge payday? And if that's the way you want to go, there is nothing absolutely wrong with it. That's totally fine as long as you understand that that's what you're doing. So let's first start with some basics. When I talk about investing, what I'm talking about is something that is duplicatable, meaning you can do that same activity over and over and you can get a predictable result, meaning that you have a similar result every single time with about a 95% certainty factor, keeping your goal in mind. So why do I say 95% certainty? Guys, the only thing in life that is 100% certain is that we all age and that at some point we're not going to be here. Right? That's the one thing that is 100% certain. Besides that, there is no such thing as 100% certainty. Whenever you're investing, doesn't matter how solid you think your investment is and how good it is and how proven of a model it is, there is always an amount of risk that is attached to it. So you always have to consider that there is always some amount of risk. And the risk can come in a lot of different forms. So we're going to talk about that, but I want you to keep that in mind, that you're looking for a duplicatable, a predictable return, and you're looking with a large amount of certainty, which is your goal should be is to drive down the risk factor or minimize the risk factor. Well, other things we're going to consider is the liquidity factor, meaning how liquid is that particular form of investing or form of gambling that you may be doing. Number two is, what is the barrier to entry, right? Because a lot of times people don't think about when they maybe invest either in crypto, they are putting money into the stock market and or real estate, is what is my barrier to entry? Well, can I just get in? Do I need to have some sort of education? Do I need money? Do I need credit? Those are important criteria to consider. The next thing is, what is the market mania in place, or what is the volatility of that particular activity that I'm engaging in? That's an important factor. The next thing is there a tangible asset? Now, some people may say, well, but Andrew, I don't care. That's the old school way of investing, man. You're not really with the modern times that you want a tangible asset. That's fine. But my question is, have you thought about that? Have you considered that what is it that backs that particular type of investing that you're doing, or is it just merely gambling? The next thing becomes is that if you keep doing what you're doing today, meaning the activity, be it crypto, be it stock market, or be it real estate, what is the outcome going to be for the next 5 years or in the next 5 to 10 years? See, for me, it has to be duplicatable. It has to be predictable, and I have to be able to control and drive down the risk. We can't control the market. You and I, none of us can control the market. All we can control is our participation in the market and what that participation will result. So let's first look at crypto. Well, crypto, as we all know, is a new form of kind of participating in a financial vehicle, right? A few years ago, it didn't exist. Yet today, it's the hottest thing. So some basic things to look at. Why is there so much interest in crypto? Number one, it's new. Anything that is new, there is a kind of a audience for it because they just want to be at the latest thing. Latest and greatest for them is the best. Yet, crypto, one of the biggest advantages going for crypto is that the barrier to entry is extremely, extremely low. I mean, you could literally be a 15, 16-year-old kid, and as long as your mom or dad let you open an account, you could basically take a few little dollars and you could invest, and you could watch it day in and day out, discuss with your friends, maybe in high school or college, and it can be something very exciting. And that is one of the big reasons. Number two is that it has a huge amount of volatility. Now, we know a huge amount of volatility attracts a lot of investors because guess what? It's human nature to look at the upside of things. Whenever the crypto is going up, if you look at Facebook, if you look at any sort of social media, everybody and their brother are the new experts of how to invest, how to analyze, how to look at charts, how to do predictability models, how to do all these things about crypto. Why? Because it's something new and there is a lot of buzz about it. Well, the other problem with that is this, though. There is really no hard asset that backs any type of cryptocurrency. At least that's my particular take on it. The other challenge is that a lot of governments, say if we take an example like the government of India, recently basically said Indian citizens could not own crypto in their accounts. Now, there'll be proponents of crypto, they'll say, oh, that is absolutely, they're trying to control the currency, and so on and so forth. And there are a lot of different arguments to be made that the feds, be it the powers to be, are trying to control that. And while that is a valid argument, that still creates a lot of risk to it. Well, now the IRS wants to tax that income because they consider it taxable income, your gains from crypto. So that's something, other thing to consider. Well, other people who are proponents of it will say, but Andrew, there is anonymity. I don't want anybody to know that I'm investing in crypto. Maybe I'm a crypto bazillionaire. Well, good for you. And I hope and I wish to you that you have lots and lots of anonymity because you can hide behind the technology that exists. But my question would be is this, that if you are within United States or maybe Canada or whatever country you're in, there are certain jurisdictions that control the companies that are providing you that service of being able to trade crypto. Tomorrow, if the lawmakers so rule or so decide, where does your anonymity go? And this is not a question that I have a 100% answer to, or if there is even an answer that exists. But this is something to think about, that today there is no anonymity that exists, especially if you're doing anything on the internet, because guess what? Every single thing can be traced back to you, even if you're hiding behind some sort of a VPN and you think you're very anonymous. Just a point that I thought I'd bring up. The next thing is that, well, I can become rich overnight. And that's true. There are people, the other day I get a call from somebody and say, Andrew, you know, I bought crypto at about $1,000 and today it's worth $50,000. I'm not sure when exactly they did this investment, but his challenge to me was, well, what do you really think about it? I'm like, I think you're damn lucky and I think it's fabulous, right? You should celebrate that your crypto holdings are at about $50,000. It's wonderful. And tomorrow it may be worth $100,000. What am I going to think about it? I'm going to think about the exact same thing. Doesn't matter if they're worth $1 million or $2 million. or if they go down to 20,000, or if they go down to virtually nothing. Because my challenge with that is this, that the $1,000 that this gentleman invested today is worth much, much more. Yet, if he calls that investing, I would challenge and I would say it is gambling. Can you gamble sometimes and win big? Sure. Can you gamble most of the times and lose big? Probably so. I'm talking about the statistical odds because there's no controlling what is going to happen. It's completely volatile and it's dependent on the market. Lastly, I'll say this. There has been, because this is an activity, meaning investing or gambling, whichever way you want to call it, in the crypto markets, it is full of fraud and it is full of a lot of losses that a lot of people have kind of suffered, because still today, it remains an industry which is highly, highly regulated. Now, at some point, as the powers may be that exist, they're going to want to get their hands on putting some sort of control around it. But as we do this recording, it still is kind of the wild, wild west of being able to participate in the financial market. So I'm not saying crypto is good. I'm not saying crypto is bad. It's something that, because number one, I do not understand it. And I'll be the first person to admit it, that I do not understand it, because I do not understand the intrinsic value. So who am I to say it's good or rather bad? Yet I look at it as something that has a high amount of volatility, meaning high amount of risk that I cannot control. Hence, I stay away from crypto. So now let's take that and compare that to the stock market. Well, stock market is one of those things that if you look at the stock market and where it really started going through the roof, if you look at it in history, it basically started going through the roof when they opened up that you could have a company that you work for and they would contribute to your 401k. As soon as that change happened in the market, immediately the stock market over the years obviously completely took off. That was a way where companies could raise a lot of capital, invest back in the infrastructure and grow, and hence people's portfolios have grown. Now, the biggest thing in the stock market is it has also a very low barrier to entry, meaning you could be a recent graduate, get a job working for a company, and 401k contributions type of thing is something that they would do just as a matter of your salary. You can choose to participate, not choose to participate. And a lot of times, even people who choose not to participate because their 401k contributions are matched and or in some way the company contributes, they're forced into investing into the stock market. On the other hand, today, there's a lot of interest by people who are young, people who are not so young, people who were sitting home during when the coronavirus happened and they wanted something to do. And they, because of all the platforms that exist today, it's an easy barrier. The barriers to entry are very, very low. And with very little money, you can participate in the stock market. So it's a great thing for those who are interested in it. Number two, it's a tangible asset. Not all stocks are going to be tangible assets to say per se, but to the most extent, right? You can buy a lot of companies where when you own a stock, what do you own? Well, you own a fraction, a very, very, very small fraction technically of that particular business. And you hope that because it is a traded company, hopefully you're investing in something which is properly managed by so-called the CEOs and the powers that may be that run that particular company. And over time, because it is properly managed business, it will do well for you and perform well, generally over a long term. Right? And long term depends on what your definition of the long term is, but generally over long term, if you're investing in the stock market, even if it's just a few $1,000s over years, the results have been generally very, very good, and it has kind of beat the inflation numbers in general. Well, it's an easy method for those who like to diversify, because you may want to diversify in a lot of different industries, and stock market is something that provides a lot of different diversification. You could participate in the real estate market by investing through the stock market. You could be in aerospace, you could be in medical, you could be in a host of different industries, and you can hedge your bets in terms of what industry is doing well within those particular years. The other issue with the stock market, which is in fact a great part of it, and people love the factor that it has high amount of liquidity, right? That you can basically pretty much cash your chips in whenever you want, and it's based on you. Now, the market price you can't control, but the high amount of liquidity that the stock market provides, and for even if you look at wealthy individuals, a significant part of their portfolio happens to be invested traditionally in some form of stocks, mutual funds, bonds, ETFs, so on and so forth. The next part of it is that you can be as active or as passive in terms of the activity, how you want to participate in the market. You could be all the way on the side of being a day trader, where you're watching the market, morning, evening, and night, and be very active in terms of your participation, or you can take a much more long-term and a passive approach where you invest it and you forget it type of an approach. So it depends on who you are. To some extent, the market will pay you some sort of income in terms of dividends and so on, so forth. In my personal opinion, much more predictable, much more long-term, has a long-term proven history in the stock market, and is highly, highly regulated in general, so you can have a better understanding of what is happening of the market as a whole rather than one singular stock. So I'll give you an example of that. Back in 2009, I don't happen to invest in the stock market, but I bought one share. I bought one share of Berkshire Hathaway. And still till today, I happen to own that one particular share. Now, at that time, I bought that particular share for somewhere around $76,000 or $77,000. That's Class A share, one share at that time, and still till today, I have held that particular share. Now, I don't know what the price is today of that particular stock, but it went up to somewhere around $300,000. Have I been actively investing, quote unquote, in the market? No. That was something that I had read books from about Warren Buffett and about the history of what he has built. And so it was kind of owning one singular stock of somebody who I consider the god of investing. So am I an active investor? Absolutely not. Is that a stock I've held through thick and thin? Yes, because I feel it's a run and professionally managed company. So that's my style of investing, yet your style of investing may be taking a much more active role. Can I consider that a big win? Sure. But I'm not immature enough today to kind of say to you that, oh my God, look at what a great investment I made. Why? Because at that time, the $72,000 that I invested, or $77,000 that I invested back in 2009, what else could I have done with it? Meaning that does my time value of money, does the money that I invested back in 2009 versus today, how many years has it been? It's been about 12, 13 plus years since 2009. Could I have done anything else, and could I have gotten a better outcome or a better result? Not that what happened was bad by any standards, it's great. Yet, was there any other option? Well, that gives me to my third point, which happens to be real estate. Well, why real estate, right? Real estate is certainly not very liquid, meaning even if tomorrow you decide to do a fire sale and you decide to sell your property, your house, your commercial land, whatever the case may be, it's very, very illiquid, right? Number two, you have to have, if you truly want to invest in real estate, buying a house to live in is not an investment. It's a house that you want to live in. It meets your financial needs, meaning it provides housing over your head, it provides a roof for your kids, and it may be bought based on, well, you like a house, or you want to be in a good school district, so on and so forth. That, I don't consider that investing. That is a need that you have that you need to satisfy. And you may choose to look at an area which you like. You're not looking at just the investment factors, but when we talk about real estate investing, the great part about real estate investing is it happens to be tangible, meaning you can actually go and look at the piece of land, look at the property that is on it, be it commercial real estate, be it multifamily real estate, be it residential real estate. That's one of the big benefits. So even though it's highly illiquid, but it can be a very tangible asset, meaning there is brick and mortar that is attached to it. Number two, the great part about real estate is that it is a proven long-term investment, meaning there is a historical value behind real estate if, and this is the big if you understand how to analyze it, right? If you just buy a piece of property just because you think it's going to go up and the market crashes in the next 2 years, well, guess what? You were 100% wrong, and then it is not a good investment. So there is a big education factor or intrinsic understanding of real estate values that is important. So that brings us to the fact that the barrier to entry in real estate is a little bit higher, because not only is it based on having some money, having some credit, because both of those things help, the biggest barrier to entry in real estate is having the specialized knowledge as well as the skill set. And this is the part of real estate that most investors, so-called investors, people who use real estate in terms of, again, what did we say about investing? Investing is duplicatable, predictable, and people who can analyze the risk that is attached with that particular investment. Most people, where they go wrong when they're investing is that they are incapable or they don't really understand the nuances of being able to analyze the risk that is associated with that particular activity. Well, one of the biggest factors that people love about real estate, especially in terms of income producing aspect of real estate, is that it can create a tremendous amount of cash flow if the investment is done right. And guys, doesn't matter if it's the stock market or if it is real estate, all of this is predicated on the fact that you're making a wise, well thought out, well analyzed decision. So one of the big factors that people like about real estate, and I happen to love about real estate, is that the cash flow it has the ability to provide if it is done correctly. The next point that I feel that is really, really good about real estate is that it is a phenomenal hedge against inflation. This is a big factor. Even in countries where the inflation rates are 12, 13, 14, 15, 16%, real estate, if you own a lot of real estate besides the property that you live in, it automatically, you don't have to do anything, but just because all the goods and items, be it milk, be it eggs, be it meat, or be it any goods, meaning brick and mortar that is attached to your particular real estate or raw land, because all those items are going up in value, inherently you are hedged against inflation that may exist wherever you may live. Now, we already talked about the liquidity factor, so I'm not going to bring that up again. The other factor is that deals are based on your market knowledge and skill set. This is important to understand, meaning when you decide to participate in the stock market, or if you decide to participate in cryptocurrency, the assets that you can buy, be it crypto coin, some sort of a crypto type of a coin, or be it a stock, it's going to be bought based on what it's trading for at that particular day. You're not going to be able to buy a stock if a GM stock is trading for, let's just say, $78. On that day, you cannot go and pick up that same GM stock for $38. Why? Because stocks, as well as crypto, is sold based on what is the market going rate for that particular moment in time. Here's the biggest advantage if you are a real estate investor, that if the market price of a property in a certain condition trades for, let's just say, $200,000, that same property can be picked up from sellers that are in distress at a much lower price, which doesn't happen because the real estate market is illiquid, meaning properties take time to close. Even if the property is listed on the multiple listing service, there's a long amount of lag time between it going on the market versus it closing, and the amount of properties that are available in real estate. It's a very inefficient market. So for somebody who has highly specialized skill, you can pick up properties that are 50, 60, 70% off value, even though the actual price in the marketplace is much, much higher. If you compare that to the stock market, and if you compare that to the cryptocurrency, that does not exist, neither in the stock market nor in the crypto market. One of the biggest advantage, which most people never even mention, and they fail to mention, is that one intrinsic advantage that real estate has over any other asset class, be it precious metal, be it diamonds, be it any other asset class that you may look at. If you're looking at investing in gold, gold is going to trade for whatever the price is that moment in time is what you're going to have to pay for an ounce or a kilo of gold. Whereas with real estate, you can buy properties in a given market as long as you know how to look for distress or how to look for people who don't want that particular asset at that particular time at a much lower price than the fair market value of that particular asset. The other part of real estate, which is very unique, that you can actually buy an asset which is distressed, meaning which is in trouble, a property that is in trouble, or a homeowner that is in trouble, or a property investor that is in trouble, and you can buy it undervalued, add value to it by improving the property and bringing up the price. That is something that is very unique about real estate. The next part of real estate is the leverage that it can provide. Well, just like not similar to the stock market or not similar to the cryptocurrency, in real estate, a lender is willing to lend you 75 to 80% of the value in that real estate in terms of buying a property. If you're a qualified investor, well-qualified investor, you can put 10, 15% down, and the rest of the leverage can come from a lender, i.e. a bank or private money, in terms of investing. So what it does is that it increases your yield curve exponentially. Plus, with stocks or with cryptocurrency, what you cannot do, and this is a big factor in terms of investing and considering when you truly think about building wealth with any one of these vehicles, is you have no such thing like refinancing that particular asset, which is available with real estate. There's some unique advantages in terms of leverage, in terms of inflation protection, in terms of leverage, in terms of being ability to be able to borrow against your assets or to buy more assets, which makes real estate very, very unique. The other part of real estate, which I absolutely love, and that happens to be that it is based on your ability to analyze the risk that exists with real estate assets versus the ability to be able to analyze the risk. Because if it's cryptocurrency, it's purely dictated by the whims of the market. If it is the stock market, it's dictated to a certain extent by the whims of the market, and that the management that is running the company is going to make the right decisions, meaning you and your actions cannot affect the price of neither the cryptocurrency and nor the stock market. The last part of real estate, which a lot of people don't consider, and which they consider that is a bad thing yet happens to be a good thing, which is real estate is illiquid, as we've already talked about that. Yet the volatility in real estate is a lot less compared to any of the other markets. And people might say, but Andrew, that's not a true statement. What happened in 2008? What happened in 2009? What happened in 2010? 100% agreed. Here's my argument back to that. Well, think about how quickly the prices fell in 2008, meaning the prices fell by 6, 7, 8, let's just say 10%. But that was over a period of a year, year and a half, 2 years. Real estate does not lose value like the stock market versus or cryptocurrency. Cryptocurrency, you may have a certain coin at 25,000 today and 19,000 the next day. In real estate, the beauty of real estate is it takes time. Even if the property prices are escalating down, they're going to come down by maybe 1% or 2% over a period of a month. So you still have time. If you are a financially astute investor, you still have plenty of time to be able to dispose of those assets just by reducing the price incrementally, versus in the stock market or the cryptocurrency market, more so on the crypto side versus stock side, it is much higher risk associated with it. So am I saying that real estate is a superior investment for you? I don't know. For me, it certainly is a better investment because it's not based on what I start with. It's based on the knowledge base that I have. I can use that knowledge base to multiply my results. Same thing if we look at the stock market. Not that stock market is a bad investment. A lot of people have done exceptionally well. In fact, for the general public, stock market happens to be one of the better investments out there that you can make as long as you keep a long-term horizon into place. I would categorize the cryptocurrency more on the gambling side of things. Now, people will disagree with that. They say, Andrew, you just don't know what you're talking about. It's not gambling. I am investing in cryptocurrency, which is totally fine because I can't analyze the risk and I can't predict the future. I call it more on the gambling side. If I choose to invest in the cryptocurrency, I would basically look at it more as an exercise in fun and having a great time. If I win big, God bless. If I lose, well, what more could I expect? If I'm investing in the stock market, I could put a little bit more study into it and look at a little bit more predictability, certainly in comparison to the crypto market. But if I'm looking at the real estate side of things, it is something much more that I understand. And I challenge you that if you look at the three different ways of putting your money or trying to multiply what you have, or maybe what you don't even have, over the next 5 years, real estate will win out 100%. But as I've said many, many times in the past, guys, if you take care of real estate for the first 5 years, real estate will take care of you for the rest of your life. Hopefully you've enjoyed today's recording. It's not about right, wrong, or indifferent. It's just about different viewpoints. This is Andrew Holmes, and talk to you guys soon.